Dollar cost averaging on steroids. This is a theory. And if you're a financial advisor or someone astute in finances, let me know in the comments how this wouldn't work or if it would work. Just a theory that I wanted to share. Hello, you got Mr. Smith, 0.5 of Mr. and Mrs. Smith. And in this brief video, I want to just think about spew off an idea or a theory or thought that I had. I'm like, I wonder how that'll play out, or if it can play out better and help a person grow their money faster. Dollar cost averaging on steroids. So first of all, what is dollar cost averaging? If you clicked on this video and you saw dollar cost averaging on steroids, then I'm pretty sure you're astute or you know a thing or two about investing. You know a thing or two about stocks. But I'm not going to assume that everybody who clicked to watch this video knows about dollar cost averaging or knows about stocks. So I'll just briefly elaborate. So basically, of course, you probably know what stocks are. Stocks are shares of a company that you can own. And by owning shares of the company, it's like you're a part owner of the company. So you get to benefit off of the proceeds or different ups and downs. You get the benefit or take a loss with the company that you're invested in. So what that may look like is if you invested in a particular company and they took a loss, the money that you invested goes down. But at that same token, on the other side of the coin is, if they make a profit or they make proceeds, then you get the benefit because your money, the value that you have in that company increases and sometimes pays off in dividends as well, depending on how you have it set up. So that's the power of having a stock. So it might be things and companies that you like, you use, and things of that nature that if you had investment in, not only can you like and shop with them, you also have an investment in it. It may be places that you go, banks that you use. You also have ownership in that company. So you're not looking at it from a standpoint you just use and consume these products and services. You're a part owner in it as well. So you celebrate when you shop at these stores or use these products and services. And you celebrate when other people use these products and services as well. So there's benefits to having stock ownership, and I recommend it. Even though some don't, I recommend it. Now, dollar cost averaging, what's that? Basically, if you're investing in stocks, you want to be doing it on a regular basis. You want to develop a practice and do it on a consistent basis. Yes, you can make money if you make a lump sum investment and just see what it does. And, that's not necessarily recommended, especially with just buying a stock. If you're going to make a one-time investment, I recommend investing in something like an ETF or a mutual fund. I did another video on that, so I won't talk too much about it here, but basically an ETF or a mutual fund or REIT, which is a real estate investment trust. Basically, those funds are a bundle of stocks or shares in a company. And by being in a bundle, you're able to spread out your risk. And if certain companies are doing well on particular days, and others are taking a fall, your money is not guaranteed to fall because of that one company. You have other companies that support you. So it helps to have your eggs in multiple baskets. It's basically diversification all in one area. But with dollar cost averaging, it's based on the individual who invests on a regular basis. What's a regular basis? Whatever you deem regular, whether that's once a year, whether that's once a quarter, whether that's twice a year, biannually, whether that's monthly, whether that's weekly. But my theory is, what if we did it daily? Now, dollar cost averaging is this, and I love how it was broke down when they first made the light bulb go off. Some people say, if it's a queen watching this video, when you're buying shoes, if you had $200 that was given to you every single day, and you'll get another $200 tomorrow, but the only catch is you have to buy shoes with that $200. In order to get the $200 that next day, you have to buy shoes. What would you do? And the simple answer is, I will buy some shoes so I can get the $200 again that next day. Now, in buying those shoes, what you have to understand is this, and I won't go into the whole breakdown of it, but it was pretty profound, and I may do a separate video on that. But what you have to understand is this: the shoe price might vary. So if the shoe price varies, you might not get as much bang for your buck based on the variations of the shoe. So if you're into high-end shoes, you might be able to get one pair of shoes for $200. But if you're on the lower end of shoes and you pay for shoes that might cost $15, you might be able to get multiple. But if they are not having a sale, then you end up paying more for the same shoe. However, if there's a discount, you get to save more money, or you get to get more shoes. And that allows you to make that money stretch even further. So how does that look in terms of stocks? Well, the stocks rise and fall. So you don't want a set price in stocks. Some people vote and say, just off not even thinking, I would like for things to stay the same price forever. When it comes to stocks, you love the ups and downs that happen with the stocks. Why? Because when stocks are lower, that means you get more of them, or more of the shares. Even if you buy partial shares, it's congruent with that as well. You get more of the shares because you got it at a discount. So when the market drops, think discount, discount, discount. Same way if the shoe was to advertise, hey, we're doing a 50% off sale, you would run and try to buy the shoes. Or you will run and try to buy whatever it is that you like, whether it's watches, whether it's hats, whether it's clothing, whether it's food. Because I know we buy avocados and things of that nature. And when we see that they have a sale on avocados, we're like, boom, we're going to buy more. So you have to think of stocks the same way. And dollar cost averaging is just that. So if you're investing regularly, monthly, 1 month, the stock might have been $80 a share. That second month, it might be $85 a share. That third month, it might be $90 a share. That fourth month, it might be $83 a share. That 6th month, it might be $79, $70, and going on. But if you're investing the same amount every single month, or every so often, when the price goes down on it, you get more of the shares, which gives you more ownership, and that's what's dollar cost averaging. So the dollar cost averaging means that if you invest $200 a month, every single month, when this particular, and when I say stock, this could be an ETF or a mutual fund to where you have a bundle as well. But basically, if you're investing $200 a month, it might not cost you a full $200 to get a $200 share or $200 share in this particular account all the time, because when it takes a dip, now you're able to get more of it. And all you did was continue to consistently invest on a regular basis. And now, with that being said, you're able to get more shares over time because you invested consistently, and you were able to take advantage of the down times as well as the up times. Because even if you buy on the up, it's okay, because you bought on the down, it made those stocks rise and you're just still consistently buying. But when it takes another dip, guess what? Your money just went further because you got it at a discount. Now, this is the theory, and I conclude. What if, instead of investing monthly or weekly, we did it daily? Now, of course, I know the market isn't always open, so you have to do the math. So if you regularly invest, I'm keeping it at $200 a month instead of doing it once a month. What if you invested that same amount? Say the market was open for 4 days and you invested $50 or 4 days, and you invested whatever the math breaks down as, to where $200. Let me do the math. All right. So 4 weeks out of a month, let's say it's open for 4 days, boom, 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 $5, 20. All right. So if you invested basically $10 every day into a particular stock, so you did about $50 a week, and it totaled up to $200 in that stock, could that be dollar cost averaging on steroids? Because each day the number changed. So you put 10 here, 10 here, 10 this day, 10 this day, 10 this day. So as it's going up each day, your dollar cost averaging, because it might have went down some each and every day, but you did that for 20 days total. So $200, still the same $200, but you did it broken down in $10 for 20 different days while the market is open. Would that allow you to put your dollar cost averaging on steroids? Because it's so easy to invest now when you got different apps, and I'll put a link to an app below that you can get 2 free stocks for watching this video. Click the link below, get the 2 free stocks. But it's so easy to invest nowadays that people can do it just like posting a Facebook status. You know, it's so easy to invest. There's tons of different apps out there, but it's so easy to invest. So a person investing daily is a real thing. A person being able to do that is a real thing. So I'm interested to know, would that theory put the dollar cost averaging on steroids? If you're an expert in stocks, let me know. Nah, that won't work because of this. Break it down. I don't care. I won't get offended or anything. That's not what this is about. I just had a theory and thought I said, what if we invested every day? Just really built that investment muscle. I don't care if it's $2 a day, because now you can buy partial shares, but just develop the muscle of doing it every day to where it becomes religious, to where it becomes a habit, to where you feel like the day is empty because you did not do it. What if? Would they make the dollar cost average and go through the roof? That's my theory. Grab your 2 stocks down below. If you're an expert in stocks and you know that will or won't work, put it below. I'm interested to know, and I won't take any offense if you say that it won't work, it sucks, a stupid idea, yada yada. I don't care. And this is not for the person who does day trading or any of that. I ain't talking about that. I know y'all know how to make the money grow and do all kind of stuff. I'm not into the day trading yet. It is intriguing, but I haven't got into it. So this is not that. I'm just talking about the person who invests for the long term, but instead of dollar cost averaging on a monthly basis, you do it on a daily basis. That's all I got. Mr. Smith, don't forget to grab those 2 free stocks. If you haven't already, signing out.